Good day, this is Attila Kovács from GTC News Stockscope results for the 5th week in 2018. Week 5 was the most anticipated of all as for earning reports, and it has given us what everybody expected. In some cases it was surprising even to us, but as we always focus on mid-term investments which we cut short or hold longer when necessary, we are proud to present our choice of 5 companies' results. The Advanced Micro Devices. The AMD has released its quarterly earnings guidance on January the 30th in 2018. AMD reported 8 cents earnings per share for the quarter. The company earned $1.48 billion during the quarter, had a return on equity of 16.76% and a net margin of 0.81%. The company's revenue was up 33.8% compared to the same quarter last year. An earnings report finally made Advanced Micro Devices investors smile as the company reported fourth quarter results that featured a solid holiday season performance and, more importantly, upbeat guidance for the upcoming year. While Reason and Vega led the computing and graphics group to solid year-over-year growth, the real catalyst for AMD is the EPYC. The server market is the company's primary growth opportunity, and 2018 will only bring more progress on this all-important front. Facebook has released its quarterly earning guidance on January the 31st in 2018. Facebook reported $2.2 earnings per share for the quarter. The social networking company had revenue of $12.97 billion for the quarter, had a return on equity of 27.25% and a net margin of 39.16%. Facebook posted fantastic fourth quarter results with a moderate decline in daily active users and an intensified effort to build community and suppress false news. Given its financial performance after the changes and the new lower US tax rate, we should increase its fair value range to $225 to $240 per share. CEO Mark Zuckerberg's plan to change the core platform will be validated by improved return on investments for advertisers, what could be a more durable product. PayPal has released its quarterly earning report on January the 31st in 2018. PayPal reported 55 cents earnings per share for the quarter. The credit services provider has revenue of $3.74 billion for the quarter, a net margin of 13.71% and a return on equities of 11.77%. PayPal's revenue was up 25.6% compared to the same quarter last year. PayPal, the largest P2P payment processor in the US, has seen tremendous outperformance relative to the S&P 500 and not without good reasons. The company's earnings have been rock solid and its business narrative is more relevant than ever as more and more consumers shift to majority of their services online. Yet, PayPal stumbled despite strong earnings and revenue beats and a robust outlook into 2018. And that's purely on the news that eBay is switching to ADN as its primary payment provider. Actually, stumbled is an understatement. PayPal has fallen more than 15% from its peak, so it's in plain correction territory. What to expect? Follow us to see when PayPal turns. Alibaba. The Alibaba has released its quarterly earning report on February the 1st in 2018. The retailer reported $1.34 earnings per share for the quarter. Alibaba earned $12.76 billion during the quarter, had a return on equity of 17.89% and a net margin of 30.87%. For just the second time in multiple years, Alibaba missed quarterly earnings estimates as Baba's stock is dropping big as a result. We believe this post-earnings sell-off the company's stock is more of the buying opportunity than anything else. Concerns over margins seems unnecessarily short-sighted given the long-term revenue growth picture, which is only getting stronger. Ferrari. The Ferrari has released its quarterly earnings guidance on February the 1st in 2018. Ferrari reported earnings of $0.84 per share on revenue of $989.3 million. The company's revenue grew 9.6% on a year-over-year basis. Ferrari has a solid marketing strategy that keeps its iconic brand well above the competition in the luxury sports car segment. Of course, we know that all this is due to the annual launch of fantastic models and the company's ability to live up to what demanding buyers expect. But this does not prevent it from setting targets for the next few years that surely will focus on unusual innovations. As we see it, Ferrari pulls the market, not the other way around, meaning that it is a stock to reckon with. Don't forget, our services are going to be available soon only for our subscribers. Subscribe now for discounted prices through our website. This was Attila Kovács from GTC News Stock Scope results for the 5th week in 2018.